On today's episode, we are going to take a quick look at Netflix. The stock price is down over 20% after the company reported earnings yesterday after the market closed. Is this an overreaction? Well, let's find out. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a free Discord, free newsletter, and a lot of great investing links. So let's get started. All right, so the stock is down over $100 today. That's pretty insane. If we take a quick look at the 5-year chart, these are prices first seen around 2018, June of 2018, and these are prices that it saw pre-COVID. We can see here in March and February, they were around that $380, $385. So that's insane how much the stock price has dropped. Another thing I want to showcase is how far this stock is down from all-time highs. It's down about 42%, and I just want to show the volatility, right? Percentage of highs don't really mean anything to some extent, but this is a company that's kind of seen this volatility before. In 2019, it saw almost a 50% drop, and pre-2020, it also saw somewhere around a high 30 percentage drop. So volatility is not new for Netflix, even though it is a giant. Some other thing I wanted to show is now taking a quick look at EV to EBITDA forward ratio. This company is sitting at around 27.62. Just to kind of put some of the other big players on map here, Microsoft, it has a forward EV to EBITDA ratio of about 22.54. So some investors might be saying, hey, this does not look that expensive at the moment. All right, so let's take a quick look at the presentation. So first, a quick overview on earnings. Quarter 4 revenue was about $7.7 billion. That was up about 16% year over year. It was up quarter over quarter. Sub growth was about 8.28 million subscribers. That was up about 8.9, and it kind of hit that total subscribers of about 221.84 million subscribers. And one thing I want to showcase is just the overall kind of numbers. In forms of revenue, I mentioned about 16% revenue growth. This is one of the lowest type of revenue growth it's seen in the past 4 quarters or so. So that could kind of be scaring investors a bit. The other thing that we want to take a quick look at is the overall subscriber growth did miss expectations. So the company Netflix was guiding somewhere about 8.5 million. They got somewhere around 8.3 million. So that miss in expectation, I believe, is one of the reasons the stock is down a lot right now, especially when this company this quarter had Squid Games, right? Squid Games was very, very popular, a strong kind of quarterly slate, a lot of great shows. For example, Cobra Kai came out. So they kind of overestimated it seemed, and you don't want to see that as an investor. They also did give Q1 outlook revenue, and they expect about $7.9 billion. That is expected to be up about 10% year over year. But this is one of the lowest number growth in forms of revenue. They also expect to add about 2.5 million subscribers, about an 8% year over year growth. I do want to say the low number on guidance, right? 10.3% revenue growth. Netflix no longer, in my opinion, is one that investors will be like, hey, this is one with the crazy growth story. I mean, to me, double-digit growth, 10.3%, is still a healthy, impressive company, but it's not that true growth story that it was before. Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. At the end of the day, I personally haven't seen anything horrible at the moment. I do want to showcase one thing though. This is pretty cool. They have a weekly global pay net abs year-to-date chart, and we can see 2018 and 2019 were very similar to each other. 2020 was the time during COVID, and it was a great year for Netflix. Netflix said that, hey, they took a huge growth in 2020, so 2021 was going to be a pretty weak year, and it was, right? So that's compared to expectations. In theory, what investors would want to see is 2022 to be somewhere between 2020 and 2021. But kind of looking at that expectations, it seems like 2022 starting off the bat might seem a little bit weak. But they do mention that Q1 of 2022, they don't have much content coming out in the beginning half, so no real reason for people to subscribe. So that's why they expect a slow first half of 2022. But once more content arises, I personally would want to see this be somewhere between 2020 and 2021. So something similar to this line that I've kind of just drawn out. Obviously, I don't think that's going to happen. I think it'll probably be more something like this, a little bit higher than 2021, but I don't expect it to be anywhere near the levels of 2018 and 2019. Now, let's take a quick look at some of the highlights from their earnings. Top Google search shows their content is very, very popular. 6 out of the 10 top TV shows Google search were Netflix originals, and 2 out of the top 10 movies were also Netflix originals. And I think that's pretty impressive, right? When you have big movies here like Shang-Chi, like Dune that did really well, but you have Red Notice and Army of the Dead being one of the top 10 movies Google search. So overall, it just shows the strength of their content. Some other highlights. Netflix launched Tundam, a website. This is more of a website that kind of does behind the scenes. It also does like interviews, behind the scene trailers. So it's just a way to kind of create fandom for the Netflix community. I think it's pretty cool. Personally, I would want them to do this more in like a social platform instead of creating a website. I don't think too many people would go to these websites to do this. I think it's probably better to focus all this energy in showcasing this in like in a social platform where you have more eyes, maybe on YouTube, maybe on Twitter, maybe on Instagram. I think that's probably a better move so you can get more traction and more views. But who knows? I'm not Netflix and I don't know exactly where they're going with that. Some other things that they did mention that were a bit scary, I do believe this is another reason for the kind of bearish stuff, is they did lower their prices in India. They were expecting huge growth in India, but they had to lower the prices because content and streaming platforms in India are very cheap, so they have to kind of meet with the competitors there. So that's something you don't want to see again as an investor. All right, so next I want to take a quick look at their regional breakdown. I really enjoy this slide. We can just overall see a few things. Paid memberships in United States, Canada region continue to grow. Even though this is already a developed market, they grew a nice 1 million subscribers this quarter, so I thought that was pretty impressive. And average revenue per membership continues to grow. Obviously, if you're here in the United States, you're getting hit with price hikes. Good for the company, bad for us as the consumer. We can see the biggest markets that right now are growing for Netflix are Europe, Middle East, and Africa, and the APAC region. Those two alone grew somewhere around 6 million new subscribers, more than half. I think probably even more than 70% of total subscribers. Latin America, right? Their paid net additions in Latin America were actually less than the United States and the Canada region. And this was pretty interesting, right? You would expect Latin America to, since it's international, to be growing faster than one of their biggest markets. But at the moment, it doesn't seem like that's the case. And so right now, Netflix is trying to, determine if they need to decrease prices to kind of increase the growth there. So that's something to kind of keep a note of. Finally, some things to know. They do expect to be free cash flow positive by the end of this year and beyond. So it's not just going to be for 2022, but it's going to be for 2022 and so forth. I think that's great news as a company. Netflix is now, like I said, it doesn't seem like they're becoming that growth story. It's more like that healthy growth with some form of healthy money coming in. So that's great. The second thing is they did not have any buybacks this quarter, and the main reason is they used that cash to buy that Roald Dahl story, the ones that owned a lot of, I think Willy Wonka is one of the stories that they own, and a few more. So they are increasing their content catalog, and instead of buying back shares, they're using it to invest on that kind of studio, and I think that's a great move. I personally don't have shares of Netflix, but at the current price points, I do believe this could easily be a tier 2 stock in my portfolio if I ever decide to kind of enter. With the price point entering right now, I would do a high to mid dollar cost average. Again, obviously numbers sucked, but they weren't bad. It's just this is no longer that growth story that it was before, and certain investors are not happy about that. But expecting to be free cash flow positive, still growing quarter over quarter, maybe not as strong. I really like it. So maybe if it stays at these levels around the next week, I might even think about opening a Netflix position. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.